I want you to stop scrolling through your feed for just a moment, take a deep breath, and really focus your undivided attention on the chart displayed on your screen right now. What you are looking at is not just a standard stock price moving up and down like any other company you might find in the S&P 500 index today. This is a historical financial anomaly that will likely be studied by economists and market historians for decades to come as a turning point in the global economy. At first glance, a rational person might look at this vertical line and assume it is a speculative cryptocurrency or a penny stock being pumped by hype. But you would be completely wrong about that assumption because this is the financial footprint of NVIDIA, a multi-trillion-dollar behemoth that is rewriting history. It is defying every fundamental law of financial gravity known to Wall Street and leaving the most seasoned analysts completely baffled by its trajectory. NVIDIA has become the absolute undisputed engine that is currently powering the entire global artificial intelligence revolution that we are witnessing today. Right now, it is arguably the most critical asset on the entire planet, effectively becoming the oil of the digital age that every nation and company desires. To put this sheer scale of growth into a proper perspective for you, if you had the foresight to invest just $10,000 exactly 5 years ago, and if you had the discipline to hold on to it through the extreme volatility without selling a single share during the panic of the bear markets, that small investment would have compounded into a life-changing fortune today, making you a millionaire and potentially allowing you to retire years ahead of schedule. However, looking at these unprecedented all-time highs creates a massive psychological dilemma for anyone looking to put money into the market right now. Every retail investor is now asking the same terrifying question. Is it finally too late to get in on this trade, or is there still room to run? Am I about to buy the exact top of the biggest bubble since the dot-com crash of 2000, or am I missing out on the opportunity of a lifetime? Have we reached the absolute peak of the AI hype cycle, or is this merely the opening chapter of a 10-year technology supercycle that will reshape the world? Today, on Finance Frontier, we are going to brutally strip away all the mainstream media sensationalism and the social media noise that clouds your judgment. We are going to look strictly at the raw, unfiltered financial data to understand what is actually happening underneath the hood of this massive company. I will provide you with the strongest possible bull case for the stock, explaining why many analysts believe it could still double from here in the coming years. I will also show you the incredibly dangerous bear case that no one wants to talk about, which exposes the hidden risks that could crush the stock price. And finally, I will give my honest personal verdict on whether you should buy, sell, or hold this stock based on the current risk-to-reward ratio. Real fortunes are made by understanding the subtle details that the crowd ignores, so pay close attention to every single point we cover in this video. Let's start with the most critical factor that protects this company from its rivals, which is what Warren Buffett would call the economic moat. To truly understand the value of this stock, you must first know why it is nearly impossible for competitors like AMD or Intel to defeat them in the short term. The media focuses endlessly on the hardware, specifically the H100 and Blackwell chips, treating them like simple commodities that anyone can manufacture. But the real secret weapon that Wall Street institutional investors are obsessed with is actually their software ecosystem, which is known as CUDA. NVIDIA began building this proprietary parallel computing platform back in 2006, long before anyone cared about AI, and it is the reason they are untouchable today. Think of it exactly like the Apple ecosystem on steroids. Once you are inside, it is incredibly difficult and painful to leave for a competitor's product. You stay locked in because of the seamless integration of the software, the tools, and the libraries that simply do not exist anywhere else in the market. AI developers and researchers have spent the last 15 years building all their libraries and applications specifically on the CUDA architecture. It has effectively become the native language of artificial intelligence, and learning a new language overnight is something most companies cannot afford to do. They cannot just switch to a competitor like AMD overnight because the cost and time required to rewrite millions of lines of code would be astronomical. In the business world, this is called vendor lock-in, and it is the holy grail of competitive advantage because it gives NVIDIA total control over the market. Customers have practically nowhere else to go if they want to train cutting-edge models, which gives the company enormous leverage in negotiations because of this extreme dependence. CEO Jensen Huang has immense pricing power and can charge almost any figure he wants for his premium chips. The biggest companies in the world, from Microsoft to Tesla, will line up to pay it without negotiation because they literally have no other choice. Their gross margins are currently sitting over 70%, which is a profit margin that is practically unheard of for a hardware company selling physical goods. While everyone else is digging for gold in the AI rush and risking bankruptcy, NVIDIA is the only company selling diamond-encrusted shovels to every single miner. This monopoly allows them to print free cash flow faster than almost any company in history, giving them resources to reinvest and stay ahead forever. But we need to ask a critical question that every investor must consider. Is this massive demand actually sustainable for the long term? Who exactly is paying these insane prices for these chips, and can they afford to keep paying them year after year without running out of cash? It is the hyperscalers, the technological titans like Microsoft, Google, Amazon, and Meta, who are spending billions every single quarter to acquire these chips. They are currently locked in an intense, high-stakes arms race to achieve AI dominance and reach artificial general intelligence before their rivals do. They need hundreds of thousands of these chips desperately to train their massive large language models like ChatGPT, Gemini, and Llama. If they stop buying even for a single quarter, they risk falling behind their competitors and becoming irrelevant in the future tech landscape. But now a massive new customer has entered the chat, which provides a whole new layer of security for NVIDIA's revenue stream. Sovereign nations, governments around the world, from France and Japan to the way in Canada, are now rushing to build their own sovereign AI infrastructure. They want to own their own intelligence capabilities to protect their national security and data privacy, rather than relying on American corporations. They do not want their cultural and government data sitting on American servers, so they are building their own massive state-funded data centers. This explosive, diversified demand means the backlog is massive, and almost every chip NVIDIA makes is sold out before it even leaves the factory floor. There are literally supply trucks lining up, waiting for inventory that hasn't even been manufactured yet, showing no signs of slowing down in the near future. However, as intelligent investors, we must remain grounded and skeptical because history tells us that trees do not grow to the sky forever. We must examine the bear case and the structural risks that could bring this entire narrative crashing down if things go wrong in the execution. The biggest long-term threat is actually coming from inside the house, from their very own best customers who are also their biggest rivals. Big tech giants like Microsoft, Amazon, and Google are quietly spending billions of dollars to design and manufacture their own custom AI chips. They want to reduce their reliance on NVIDIA's high margins and control their own supply chain to save money in the long run. Then there is the China risk and export bans, which is a major geopolitical headline that many retail investors often ignore or underestimate. The US government keeps introducing stricter bans on exporting advanced AI chips to China due to national security concerns and military fears. This effectively closes the door on billions of dollars in potential revenue from one of the world's largest consumer markets, limiting future growth. And finally, there is the valuation risk because the stock is currently priced for perfection, meaning expectations are incredibly high for years to come if they miss their earnings report by even 1%, or if their future guidance is slightly weak, the punishment from Wall Street will be severe. We have seen high-flying stocks drop 20% in a single day before, wiping out billions of dollars in investor wealth in a matter of seconds. Let's look quickly at the technical analysis on the chart to see what the price action and market psychology are telling us right now. We are currently seeing a consolidation pattern, which often happens after a massive rally when the buyers are exhausted and sellers are taking profits. The market is essentially taking a deep breath and deciding on the next major move, coiling up like a spring before either a breakout or a breakdown. Watch the RSI indicator at the bottom of the screen, which measures how hot or cold the stock momentum is compared to its recent history. If it hits 70, the stock is technically overbought and expensive, suggesting that a pullback or a correction is imminent in the short term. If it touches 30, it represents a buying opportunity where fear is at its peak and smart money usually starts accumulating positions again. Watch the key support level closely on the daily chart because this line represents the battleground between the bulls and the bears. If the price breaks below this green support line, we are in trouble because it signals a change in trend and could trigger a massive sell-off. But if it breaks above the all-time high with strong volume, there is absolutely no resistance left above it to hold it back from climbing higher. It enters what traders call blue sky territory, where the price can fly without limits because everyone holding the stock is currently in profit. So here is my honest final verdict based on all the data, the macroeconomics, and the technical signals we have analyzed today. If you are a long-term investor, you need to think 5 to 10 years out, ignoring the daily fluctuations and the noise of the market. Artificial intelligence is the new electricity, and NVIDIA currently owns the only functional power plant in town that can service the entire world. If you are a short-term trader, I must warn you to be extremely careful at these extended price levels because the risk is very high. The volatility here is extreme and can wipe out your Trading account in a single bad day if you are over-leveraged or using options. My personal strategy for a stock like this is called dollar cost averaging, which removes the emotional stress of trying to time the market perfectly. Do not go all in at the top with your life savings. Instead, buy small amounts consistently over time to smooth out your entry price. Buy a little more on the red days when there is fear in the market, and ignore the noise on the green days when everyone is euphoric. The AI revolution is just starting, but the easy money has already been made, and the next phase will require patience. Discipline and emotional control. Always do your own research before making any decisions, as this video is for educational purposes only and is not financial advice. If you want to track my moves and see exactly what I am buying and selling in real time, make sure to subscribe to Finance Frontier. I am James, and I will see you in the next market update with more deep dives into the financial world.